We move on now to yet another buzzing discussion, and this time the topic of the panel discussion is collaborative partnership of BFSI and Fintech. Please welcome our distinguished panelists for this round of discussions. We have with us Mr. Pankaj Gadgil, Managing Director and CEO, Aditya Birla Housing Finance. Please put your hands together for Mr. Gadgil, ladies and gentlemen. Next, we have Mr. Litesh Majethia, Executive Vice President and Head Supply Chain Finance, FBU, Vayana Network. We also have Mr. Gopal Bhagat, Deputy Chief Executive, Indian Banks Association. Mr. Sandeep Sonpatki is Chief Business Officer, Platform Lendingkart. We also have Mr. Ravi Tyagi, Chief General Manager, SIDBI. And to moderate the discussion, Mr. Pankaj Gadgil, yes. And to moderate the discussion, we have Mr. Singh, Jaini, the CEO and founder, The Digital Fifth.
Hello. Hello. Thank you. Thank you. So, I think from a collaboration perspective between fintechs and banks or NBFC or whatever ways we can think about, I think there was a lot of differentiation maybe 6 to 8 years back when fintechs had primarily the tech piece, and many of them had no vision of looking at end-to-end licensing. And the bank side was primarily focused on building for operations and acquiring through branches, right? And last 6 years have seen the growth in digital journeys, partnerships in the market as well. Most banks know how to do partnerships with fintechs and how valuable they can be. Started with the RBL guys as well as Yes Bank taking the plunge. And then over a period of time, we have seen a lot of other entities like Federal Bank also actually getting very deep into the segment and building PNL, including SBM, and many others have done a fabulous job at it. Today, even larger banks are really looking at collaboration in multiple areas. Again, if the segment is different, you wouldn't, as a bank, collaborate with fintechs in each segment. It's linked to their business strategy, what is sensible to them, what areas of collaboration, what areas of competition. And there are also areas where they will do both things. They will collaborate. For example, Federal Bank for acquiring customers will actually technically also try to get their own customers, but they will collaborate with large entities, large fintechs as well, like Jupiter, to acquire more customers. It's a mixed approach. Now, where we are in the journey, I think a lot of things have flown by, the process are there, and there are a lot of thought process coming on from regulator perspective on what is possible, what is not possible. So at this point of time, I'll open the stage for quick 2 minutes from each of our panelists here to take their view on the subject, and then we'll go deeper into it, but we'll keep it to 2 minutes each. Yeah. Over to you, sir.
Yeah, thank you. So definitely, I think last 5 years helped with multiple things. You know, the wonderful best-in-class public digital infrastructure being built in the country. Very good talent, of course, and they always have very good talented young people, experienced people. And abundance of risk capital has resulted into some serious innovation in the fintech, which is slowly being adopted by NBFCs and now by banks. So the whole, I would say, the ecosystem is getting disrupted. And what can happen after 4 years could be unimaginable. You know, the way things are being done today, the account aggregator and the latest things coming in. I feel like the partnerships, even though today's topic is partnerships, the partnerships will also be very dynamic. Things will change very fast. And in next 4 to 5 years, we will see credit and banking happening in a way that we had never imagined. So I think it's really very good and exciting times for fintech. Fintech as financial technology, and of course fintech companies and partnerships with banks and BFCs and everyone.
Yeah. Thank you. Sandeep.
Sure. Can you get Jim? Yeah. Yeah, so I think in my view, when it comes to partnerships and collaborations, right, between banks, fintechs or other organizations, I think there are 3 critical things I would say are very important for a partnership to work. I think the first is really complementary skill sets, right? Both parties have to bring something to the table. The classic example that we see typically of a co-lending partnerships, right? The banks have capital with them, the banks have access to a much larger stability and compliance and the regulatory side. Whereas the fintechs bring a lot more innovation, they bring access to customers, they bring innovative ways of underwriting, right? So there are complementary skills coming together and working together. I think the second thing that I think is critical for partnerships to work is an enabling framework, right? Since it's a regulated industry, you have to make sure that it falls within the purview of what the guidelines are, right? And in co-lending model, again, I think there was an enabling framework that RBI drafted many years ago, and which has been leveraged. But I think the third most critical thing also, and which at times either will make or break, is an external stimuli, right? Because all entities, be it living entities or companies, etc., we tend to get into our comfort zone, right? Unless something external event happens, either RBI changes the guideline or an external event like COVID, which really, in my view, drove the co-lending partnerships in a big way. Because when COVID happened, when everything was being done remotely, banks could not send their people out to the customers, etc., they realized that, oh, we can't do without access to customers, right? And we need to have digital reach. And who can get me the digital reach? It is the fintechs that are bringing. And that's where I believe in the last 3 years we've seen a significant jump in. It's still early days on co-lending, but we've seen a lot more partnerships happening on co-lending, etc. So I think the third element at times acts like a catalyst or a trigger, right, which can help make or break things. And similarly, something similarly we saw a few months back, where RBI came out with some RBI digital lending guidelines, which also did cause some temporary disruption, which has resulted in banks and anyway started investing in technology on their own. But suddenly fintechs realized that if they are not governed by RBI, if they are not regulated, the partnerships may get affected. And now we see a lot of fintechs now getting into applying for an NBFC themselves, becoming more regulated, bringing more compliance, etc. So I think those periodically times you do need those catalysts and triggers to further increase innovation and partnerships.
No, I agree. I think over a period of maybe 5 to 10 years, as we say, it will be difficult to differentiate between fintech and bank. The only thing is that embedded finance players will be playing a lot of role there, but otherwise fintechs will become banks, or banks will become fintechs. It's difficult to call out. And sir, you stay with, I mean, you work across all the banks, right? So maybe your opinion will be useful for us, because you have view for large banks, small banks, cooperative banks, all the banks, right? So quick view on that side will be useful. What's your opinion?
Good afternoon to all of you. My background is basically...
Your device is slightly far, sir. Maybe mic is far.
Am I audible now? Or can I use your... No, you are okay. Thank you. Thank you very much. So, being a banker, I can share with you what we experienced in the last decade. Not much longer back. You know, fintechs and banks, people used to think they are taking away share of each other. Or banks used to think that fintechs are there, so we have to be very careful in shaking hand with them. And why not to develop products ourselves? But slowly, gradually, they realize that fintechs are there and they will be there, and it is an efficient way actually to shake hand with them and go ahead. I think this particular aspect has been accepted by the industry per se, whether it's a small bank, it's a medium bank, or a large bank. Now, depending on the capacity of the bank, the affordability for a particular product, banks are taking interest and collaborating with fintechs. Atmosphere is very conducive. There is a demand from customers. there is encouragement from the government, from the regulator. And in the interest of attaining efficiency in the system, technology is the only way, and it has been accepted globally. So going by the global experience also, I think the days ahead are good for both, and ultimately there will be value for customers, for banks, for fintechs. So when they shake hand, all the stakeholders are benefited. Regulators also feel comfortable because they are able to control in a much better way. Customers get more efficient pricing, and bankers get easy access to customers, and the confidence and faith of the customers which they gain is now multiplied. They also get more benefit out of it. So that's my initial remark.
Thank you, thank you. I think it's a lot linked to what fintechs bring to a table, and in many ways the customer acquisition is a critical tool which fintechs are able to do over a period of time, which banks in a very segmental way will find it difficult to acquire, and that's what they've been working in partnership. So maybe Litesh, from your perspective, since you work on the supply chain side, maybe your view can be actually coming from that segment as well, right? Because very, very specific to supply chain, which is doing very well.
Sure. Am I audible?
Yes.
Yeah. So basically, I have been on both sides of the table, right? I've been with Bank of Baroda, Standard Chartered, HDFC, and now on fintech side as well. I think there is sufficient market space available for all the players, not only in supply chain, but even in retail funding and otherwise, where there's a lot of opportunity for fintechs and for the banks to collaborate and work together. Reason I say this is because banks have their own limitations in terms of going to the market to the last year, right? We have seen on the payment space earlier, Paytm when it was not there, although RBI did everything about financial inclusion, but the last street vendor could not get a digital payment. Today, fintechs have made that possible on the payments front. Similarly, on the lending front, today we are seeing, or even the RBI is acknowledging, that the credit penetration which has happened not only in terms of supply chain finance to the last year, the retail tier of the segment, but also the credit is extending towards tier 3, tier 4, and even to villages. And that's become possible because of 2-3 things. One is digitization of the entire process, which was possible because of fintechs. Second is the capital which was available. Third was the common credit understanding and the process understanding between the banks and the fintechs. So if you see, actually $30 billion of funding, some of the statistics I can narrate to you, $30 billion of funding has come to fintechs from 2014 till date. The assets under management of fintech and collaboration players is about $1 trillion. $1 trillion, right? And that has happened because of enabling of all this. And RBI is very, very prudent about how do we reach this credit to the last mile. They're also concerned about the systemic risk, as well as they're wanting to encourage the fintechs to come into the foreplay because they have seen this advantage of credit penetration actually happening to the last mile.
Yeah, I think NTC category has been largely benefited because of fintechs entering it across board, not just the inclusion side, but in the villages side, it is actually in cities as well. So I think moving to a new segment. So you work across. I know you have a very varied background, but I'll still stick a bit more to housing, right? So I think what are the areas of collaboration you see here, right? So it will be good for us to get a full context, but maybe a bit of a focus on secured assets as well, because otherwise we see more on the retail side, unsecured side, but secured side, fintechs have not done too much, right? So any thoughts on that, generic views on collaboration here?
Yeah, thanks, Amir. It's a very good question. And just to pick up where our colleague left, Litesh left about the opportunity. So in the housing space also, all of us read this, but just wanted to reiterate. I think India's mortgage finance penetration as a contribution to GDP is about 11% only. And if you compare it with several Asian countries and developed countries, you will see the late teens, or you'll also see people at 30%, 35%, 40%. So the headroom for growth of the mortgage finance is humongous. And you see, everybody is behind, the growth of the real estate sector, one of the largest employers in the country. And you will also always see government allocation, be it the allocation that this year has gone to affordable housing. And three things are contributing to this huge growth. One, I think, and I saw this yesterday, I was in Ahmedabad, and I experienced that when I was in Hyderabad also the last week. We are seeing clear signs of urbanization, and we speak about it, read about it, but when you look at populations of many of these, after the top 2 cities of India, if you look at the other cities, these, the next 6 or 7, I think urbanization is driving the growth on mortgages, clearly. We also see the affordability index in India, significantly improving, and with customers, then obviously as the index grows, the customers' propensity to buy also increases. It's also about nuclear households. The way in India nuclear households are being, are coming in more vogue as compared to what it was in the past. So at this juncture, mortgage finance or the mortgage industry or real estate as a whole, humongous opportunity for growth. As was, quoted that, in payments, things started with payments in the fintechs, and how the industry grew, the FDI contribution of fintechs was also kind of narrated. I see in this space, as we speak today, in secured lending, the popular belief is that it's always going to be a phygital journey. It is not going to be a digital journey when it comes to, mortgage financing. But here as well, what we see is there are early signs, and 2 signs. One, NHB itself, is bringing up a platform which is going to be for securitization, where digitally the deals can get cut between banks of both the sides and also housing finance companies on both the sides. Just the way a Trades is there, for the MSMEs. Absolutely. That's going to be a large platform where, digitally people there'll be interplay, which will also be there. The other thing is that the leg up to sanctions, there we see, a lot of fintechs participating on partnerships with housing finance companies and banks. And last but not the least, on co-lending, there are a few fintechs, and, we work with one fintech which is doing very good work, on co-lending, where we see an active participation between a fintech and a bank. The last point here is that, if secured financing, has to become more and more digital, where more and more fintechs come in, the larger point can be, just imagine just the way shares at one point of time were physical and they got dematerialized. In India, if that is going to happen, that, tomorrow properties are going to get dematerialized, then the entire transaction of marking of lien, taking of deposition of deeds, if that was to happen with PDI, the way we are seeing, a colleague, mentioned about PDI in the beginning. So if we see PDI moving in this direction where dematerialization happens, you will see more and more, participation of fintechs coming on this side, and the collaboration even strengthening further.
Perfect. So I think this is interesting, and I think this panel has more load on the lending side. So I'll ask a question on the liability side as well, right? I think on one side we talk a lot about collaboration, but I also think that from a banking perspective, they also need to compete in some areas because I think, for example, payment ecosystem has been largely left for fintechs to operate, and now we're seeing a bit of a challenges with that. So I think it's a mixed bag. Segment by segment approach. Small banks can take one approach, whereas largest banks can take different approaches. I think that's how the market will look at it. My request is again, we think of collaboration as the only way. I think it can be mixed bag in scenario to scenario, right? Now let's move to, I think SIDBI has been sort of supporting the ecosystem in multiple ways. I think I remember a long time back, you launched that 59 minutes loan in that structure, right? So I think a lot of initiatives. So maybe a quick view on the kind of work you are doing with fintechs and what kind of collaboration possibility you see going forward with SIDBI.
Yeah, thanks. So that was, I think those were early days in fintech industry when we worked with that particular fintech and a consortium of PSB banks invested in that and created a digital marketplace for MSMEs. Still a lot of work to do because it's still early days. I think it's a very complex market. It's not simple. Giving a loan to, it's not a retail thing. As soon as you step away from retail or a retail loan product and come to any kind of business loan market, the products are so much, the complexities are so much when you have to read a balance sheet, read cash flows and give money. So things are, but still, things are changing very fast. So definitely we continue to work with fintechs. We are continuing to work with them. We ourselves have created several platforms. We have created a Udyami Mitra platform which manages several government schemes, including the PM Swanidhi scheme where we gave money to 40 lakh street vendors. And there also we collaborated with several fintechs. Some of the fintechs were in the previous panel also, the ones we have collaborated. As an institution, we are supporting several incubators who are working with fintechs. So I am Lucknow, there is an incubator dedicated completely in partnership with SIDBI, focused on fintechs, which will do some kind of innovation in rural economies, do it in MSME space, women empowerment. So that's one way of working. And the other thing is, I think that's the most important thing, that we have opened ourselves to partnerships with fintechs. Not only, so typically in public sector banks or any bank, it's a long process of partnering with a fintech. But we have taken special approvals, come with some really progressive policies that we can do POCs very quickly. We have created an internal ecosystem that if we find a fintech, even during discussion here, and really engage with it, and I can just take it to my, my group, and I can open my system for POC with it. I can give him some small dose of capital to do that POC. So we are looking for innovation. That's SIDBI wears two hats. We give money directly to MSME, but we are also a very big ecosystem player, developing the ecosystem. So, these are the multiple ways. And then we put money in a lot of venture funds. There also a lot of venture funds are supporting fintech. So working in all the kinds, situations. Of course, one more thing, we lend to fintechs also. So that's one more thing, because typically fintechs start by raising equity and capital, which in India was easier for them than to raise debt for themselves, to leverage the equity and increase their balance sheets. So we have also started those schemes of lending to fintechs who may not have those vintage like a big NBFC. So we give them small doses of debt capital also.
That's great. Sandeep, I think there are a lot of positives, but how do you go about doing it? I think the challenges are there. Anybody sitting on the other side would know that if you have to partner with a bank, it takes time, right? You're on a 6 months, 12 months, 18-month journey, working across multiple departments. So what are the challenges in partnership you see as a fintech? And don't bother, I think I'm sure you will be more shy of talking about something. So be frank, and it's important for everybody to understand what challenges reality you face.
Absolutely. No, I think, it's very easy to say, let's partner, right? But it's a very, very complex thing. And I think that's what Sir was also calling out. Because here we are talking of two players who are also competing at the same time, right? Be it an NBFC and a bank, we are still reaching out to the same customers. We are trying to lend in the marketplace. So at some level we are competing, but there's a realization also that just alone you can't do it. And that's where I said that for partnerships to work, one of the first things is that there has to be some mutual competencies. That banks bring in capital and the NBFC and the fintechs bring in the innovation in the business model. So that I think is the first thing that need to be in place, and both sides there has to be that hunger available, that yes, we want to partner and make things work, because there are tons of other roadblocks that can very easily come in, right? And as you said, right, there are multiple teams within the bank, right? And we just discussing backstage, right? There are about 10 departments. So first we'll start, the business team will come in, then your product team will come in, then the tech team will come in, then the legal team will come in, the compliance team will come in, the ops risk team will come in.
And along with the checklist as well, right?
Exactly.
Even before the relationship starts, checklist is there, right?
Yeah. And the risk factor goes up. Right? So any department can come and just collapse the entire partnership discussion. So it's very easy to break things and things fall out of place, right? And that's where initially also when partnership really started coming about, I think it used to take a 10 to 12 month cycle, 18-month cycle to get the partnerships working in. But I think what has helped Lendingkart over the last couple of years, right? So we have now, and we are proud to say that we have about 18 to 20 co-lending partners, right, which comprises public sector banks, which always the perception is that PSU banks, things will move very, very slowly. But we have 4 public sector banks who are co-lending partners with us. We have large private sector banks also partners with us, and even large NBFCs. So we are actually getting co-lending partnerships with other NBFCs as well, so where we are actually directly competing as well. But there is a realization both sides that yes, it's a market out there. There's a lot of untapped credit available, a lot of SMEs, the market that we work in, huge opportunity available there. So So there have been learnings. We actually now templatized the entire onboarding. So we know how to make sure we work with various departments and teams and get going there. And a lot of banks also now have their own strategic alliances teams as well, because they've also realized that getting an outsider coordinated with 10 different departments, it's going to be a nightmare. So some banks have those teams now set in place where they then program manage internally to make things happen.
And one question, I think, very straight. Do you also rate banks on with whom you partner and what kind of skills? How do you rate and sort of put your own checklist? Kiske saath kya karna hai? How? What are the things the partner should have?
So there's no formal rating or this thing, but we do also get a sense on how what other partnerships have they done, right? So if we know that a particular bank or NBFC that you are working with already has partnerships with other fintechs, then you have a reasonable sense that, okay, yes, they've been through that pain before us. So some bit of learning will come into play and things will move faster.
Perfect, perfect. So, sir, I think let's talk about the neo-banking partnerships, which is completely other side. We've been a lot of loaded with lending side, right? So, and in that side, we have seen scale up as well, right? We have seen Neo growing, we have seen Jupiter growing, and Equitas and Federal have really created a framework around that for everybody to replicate. The RBI also had digital banking unit framework, which was actually aligned to this framework, saying that you can actually do virtual partnerships. So, what are the positives you see on this neo-banking partnerships, and what is the way ahead?
You can roll, I think I'll take that. I don't know. Thank you. Sorry for inconvenience, friends. You know, the reason is there is no size that fits all. Same thing is happening with this instrument also. And I tell you, it's very relevant for our subject also. You know, I remember you asked about the liability side, like we are all focusing on the asset side, but you cannot forget insurance, you cannot forget deposit side, you cannot forget payments, you cannot forget even other derivatives, you know, which can sit on the database, which you are able to get access by way of, you know, facilitating these transactions. So when I say that you are facilitating any loan transaction, are we not facilitating simultaneously some insurance transaction? It is also there. So the field is open for all type of financial activities, products, and there is really innovation happening in the market. I have seen on the credit side also that things which were supposed to be not possible in near future have become possible, and the way the business is being done now is really very efficient, like without involving manpower in verifying the CIBIL score or verifying the rating agency's comments or verifying the GST data. Banks are able to save time, resources on all these aspects and are able to take decisions much more informed and without human error. That is one very bright point, I will say, in what is happening in the market. I see on the liability side also there is a lot of scope. It's a matter of time. And whatever is happening in the market right now, from the co-lending perspective or MSMEs perspective, these things are really good. And we need to have strict regulations in place to avoid any mishappening in the market. We have seen during last, I think, 1 year's time, 2 years' time, there were mishappenings because of, I will not blame fintechs for that, but perhaps regulatory environment was not that strict. It was permitted, they could do all those things. But given the changes in the market, I think the environment will be much more conducive to do business for all stakeholders, for fintechs, for banks, smaller banks, bigger banks. And you know, major part of the banking system, the smaller banks are yet to become very active on this. Only few major banks have become active. Slowly the smaller banks, small finance banks, they will also become active, and you will see much more presence of technology in our day-to-day life in the financial market. That's
Thank you.
from my side.
Thank you. I think digital has that impact, right? Which is customer acquisition is happening digitally and through partnership as well. Banks also are improving their digital channels. I think if you see Axis Bank digital channels are as good as a fintech channels, right? So I think it's a dramatic improvement in their onboarding journeys and all of that. I think interestingly, one of the thought process at least we carry is right now is that the branches which moved from a services to sales oriented channels will come back to service. So all branches will become finally service channels and all customer acquisition will be digital, right? So it will go back to maybe 20, 30 years back when the branches were doing only servicing and sales was not a focus. So pura ulta ho jayega. I think that's my view. And therefore the capacity and the planning of the sales team has to be appropriate. Because digital will ensure that at one point in time, customers will finally come through only one channel, which is digital or partnerships, right? Now, I think coming to Litesh, you...
Can I stop you here for just for 1 minute? See, it's not only the way the customers are looking at, when they interact with the banks or the fintechs products. Inside the bank also, when it comes to risk management, legal processing, there is a good presence of fintechs. There is a good presence of fintechs.
Correct.
So
Agreed.
it is not definitely visible to the customers or the outside world, but sitting inside the bank, you can realize the dependence on fintechs or the role of fintechs is growing. Sorry,
Absolutely. No, absolutely. I think so. It's a two-way street, right? So one is the kind of customer acquisition side. Second is pure tech platforms like a Perfios or all of these guys who are helping in onboarding journeys, underwriting journeys, or maybe platforms, right? We are now seeing new wave of core banking coming up, which is purely microservices enabled. So I think it's a sea change we see across board. So pehle backend was all dated and sort of RDBMS kind of structure, which is changing, right? I think, so moving Litesh to you, in terms of, I think all banks are now also moving towards digital so much. And as I said, they're also competing. So do you see over a period of time that that edge which fintechs had on partnership will sort of bit wither away in certain areas? Because any innovation becomes BAU very soon, right? So it will become BAU. You wanted to say, okay, 20 years back mobile banking or 10 years back mobile banking was a great idea. Today it's like BAU, kya farak padne wala hai? Let's move on. So what happens then?
A beautiful question, thanks for that. Again, starting with data. In India, fintech adoption is 87%. We are the third largest country globally who adopted to fintech as such. That means 87% of the banks and financial institutions have, in some or the other format, kind of adopted fintech as such. To your question specifically, it depends upon what the fintech has to offer. Is the fintech only offering technology, or is it way beyond that, right? Fintech should offer technology and will offer technology, but technology can be replicated, as you rightly said, very easily, if not now, in next 2 years, 3 years. First and foremost, is there a common ground between the bank and the fintech, or the NBFC and the fintech? Because everybody wants one common denominator, which is growth in business, growth in profitability, faster turnaround times. These are the things which impact the customer acquisition. Now, how is it that we as fintech and banks have started liking each other? Because of this common ground. Banks are seeing, and as I told you in my previous example, banks are seeing that the target market segment that they always wanted to capture, they were not able to capture. What makes fintechs different? They have digitization, but understanding of the transaction more effectively than most of the NBFCs or the banks. Second is the cost of acquisition. If one fintech is acquiring clients and serving it to multiple banks and multiple NBFCs, does the cost of acquisition individually for bank become higher and lower for a fintech is one question that one need to ask. And if the answer is yes, then the dominance of the fintech will remain. The third question to ask is regulatorily and process oriented wise, fintech also conscious of compliance to RBI guidelines, and hence there is no repercussion on the lender or bank or the NBFC that is funding. I think if business, technology, operational and regulatory aspects are taken care of from a holistic perspective and long-term perspective, then definitely we are in a long-term game. If any of these are going to be variable, then there will be an issue.
Fair. I think moving to the area of data, right? There's a lot of data sharing which is going to happen across in a very structured, controlled way, right? Consent-oriented way. There is a data protection bill also coming, and RBI guidelines are also very specific. So how do you see banks and fintech should create a model which is compliant to not just the regulatory framework, but also the government framework as well? So how do you manage it end to end, and maybe more insights on data sharing, insights, data, how the analysis should be done real time, because there's also regulation that the underwriting and the decision can only be done by banks. So how does it really work on the ground? How some of them who are actually building it should actually create?
I think with the new bill, coming up, I think one thing is very clear, that consent is going to be the crux, on the matter. So consent, which is not also perennial. Consent is also, there's also a concept where people can revoke the consent. That also is, coming up in the entire architecture. Of course, the bill also, as per the industry expectation, I think it is a very fair, way of looking at data. I must say that it is only conducive for the business. In my assessment, and we were talking about, I think you asked the question on whether fintechs rate banks or rate institutions earlier to a colleague for partnership. I think one of the critical things is that when you, and this is more about lending, again we come back to lending and then touch upon some of the other things that you kind of mentioned. I think the right architecture and infra for doing a partnership on the side of data also is one very, very important pillar when somebody is looking at partnering with some bank. Simple example is that, I will not name the organization, but two very, very large organizations looking at partnership. It took us almost 12 to 14 months to get into an active partnership, because the entire infra for the data room exercise, which will help you, to capture the insights what the fintech has and then converge it and convert it into a model, and to convert it into a probable delinquency and then, underwrite, became a very, very big challenge. So, how are we evolving in terms of creating separate modules? It could also be a sandbox, which will make this entire exercise of, sharing of information in the most conducive manner, in the more, I would say, a manner in which it is, fair with the regulator. I think that needs to kind of evolve. Today, models exist, and, from a very, very raw way in which earlier people used to send samples of data from where models used to get created. Today, at least, when we look at the maturity of the, fintech, or the maturity of the, NBFC or HFC or bank looking at partnership, I think there are various, models that have got developed that, you come on a cloud, you share, some instance of data, they get deleted, towards the end, you do an exercise, you create a model, and then you kind of, build it forward. In this entire journey, what Samir I wanted to also say is that, the type of capital which is there for the regulated, companies versus, fintechs is very different. And, that is a very important, aspect, because that capital which drives this innovation also is very different. Of course, with the triad of opportunity and innovation and, what lots and lots of fintechs have shown the regulated entities, I think there is this clear belief that, we have to also migrate, to some of the practices that, fintechs do. Of course, there's always an advantage for a regulated entity to look at the rear view mirror, because somebody's already done this. So then you can come in and, build things with scale. So I think that is also one large advantage which is coming up. And also, towards the fintechs, I think fintechs will also have to see, you asked the question on neobanks earlier, and when you look at Europe, what neobanks, and you had majority of neobanks coming up in in Europe, and we have some in India, but how many of them are profitable, or most of them are looking at monetization through lending as the end destination for finally becoming profitable. So how is that happening, and what percentage of fintechs are actually building models which are having a longevity also need to be seen. And you gave examples of technology service providers which naturally will be profitable. There is no reason for them to be not profitable. But there are how many companies? Very few. In robo-advisory, you have guys like Zero, Dagro, and some of the others who have hit profitability in a very, very significant way. So I think longevity of businesses which are compulsive, I think is what fintechs will also have to pursue. And on the other side, the regulated entities also have to look at white labeling, right from white labeling to, taking some positions and acquiring. Like we at Aditya Birla, for example, have a fund which globally looks at fintechs. We partner with 125 fintechs where we have taken positions, where we engage with them, we engage with universities to use some of the great work that fintechs have done to integrate that with our own companies and also take active positions. So I think it's going to be right from white labeling to taking positions. The entire spectrum is available for the fintech and banks and regulated entities participation. That's what I feel.
No, I think it's great. I think we're also seeing cross-pollination, right? Fintechs want to now become banks for sure and want to acquire banks. Some of them actually can if they are permitted. Their balance sheets are pretty strong. And of course, banks are trying to acquire fintechs as well. We see it all the time, that is there something available on the ground. The bankers want to innovate and they want to actually work in fintechs. Fintechs employees actually want to go into more stable organizations than as a bank, right? So it's a cross-pollination movement which is happening, which is great. I think the market has moved a lot in last 7 years. I think next level of innovation will be different. But anyway, we have maybe time for one or two questions. So I think if there is anything which in the forum here you want to ask, please go ahead. You can have the mic.
So my question is to Gadgil sir. Secured lending products are very complex when it comes to Indian markets because we have, going out to legal advisors or legal partners, technical partners for valuations and all those things. How do alternate data help us in these steps, which takes a lot of time, processing the entire application, because of which the TAT is larger in the secured products?
A very good question. So I think in the entire life cycle of a loan for a secured customer, and there are similarities and also dissimilarities between unsecured and secured. Secured, obviously, the tenure is longer, the ticket size is higher, it's higher commitment, larger involvement of the customer, end customer as well. So I think till the stage of sanction, I think there is lots of work which is already happening to use surrogates, instead of the hard-coded financial documents and ITR and a bank statement. Aggregation is clearly helping us on digitizing the bank statement part of the story. GST, anyways, the 15-minute loan process that was articulated earlier, also really helps you to compute the capacity of the customer to repay. So when it comes to lending, all of us know it's all about our ability of understanding the capacity to repay and also the intention to repay, which one has to understand. That's the two basic tenets. So I think in understanding the intention to repay, Bureau has done fantastic work where most of us are relying on the Bureau. It is when it comes to capacity to repay, there is all the surrogates like GST, surrogates also like what is the cash income, and we have kind of created scores and scorecards within to estimate the cash income, part of the overall income of the customer. So that's the whole work that is happening there. The other important thing is that when you do a secured lending where you have finally done that bit of financial sanction, it's also important that the property needs to be validated. Title search needs to be validated. I have seen fintechs also playing a role there, and some of the governments where the public records have been digitized. The entire process of today going to a registration office and trying to get records of the land records of the customer and the 18 years, 13 years that all of us kind of do. There are fintechs also wherever the land records have been digitized, they are able to ping those government departments, and then this is the integration that we do with the fintechs. We are able to also pull in this information. So there also you will see the turnaround times going down because legal and technical will also become digital. The last leg, which is to do with signing of documents, and I have seen this in secured lending, after joining Aditya Birla, housing finance, a big change that we have brought in is that the entire process of signing dockets with traditional banks, traditional players, even today it is manual. That, through great work which has again happened by fintechs, the entire e-signature today is, clearly on, especially in secured where you have applicant, co-applicant, which is a mandatory. I think that's a great boon for us. Even when it comes to corporates, there is a partnership or a private company where there are multiple directors in multiple locations. E-signature, arrangement clearly reduces the turnaround time and the slush. Last point which is there, in terms of the exchange of actual property, that is something that, like I mentioned earlier, unless the dematerialization happens of the property document, I think that stage will still remain, physical. So I think there will be a time, I'm sure, when Dun Bradstreet, after maybe 5-7 years, is conducting this kind of panel, maybe somebody will come in and talk about, and I'm seeing this in bank guarantee. I'm seeing this in bank guarantee. Bank guarantee always was physical, and very soon you will see digital bank guarantees being issued, where the entire process of marking a lien, the physical bank guarantee will actually be a passe. So these are the various stages of, digitalization that is happening on secured lending, and really looking forward to improving the turnaround time for customers and, making sure that they get bang for the buck.
I think we can take it offline. We can have maybe one more question. Just one more question, please. Anybody else? I think can you wait for the mic, please?
Sir, we are talking about the collaboration between the bank and fintechs. So my question is, banks means in general we talk about that urban and metro banks where see every opportunity is there. But what about the cooperative banks? Just please focus on that, because cooperative not only in rural areas, in many urban and metro areas also there is a huge network of cooperatives with a strong base. So what about these cooperatives and tie up with these cooperatives? Because many financial inclusion, what we are talking about, that can be served if we can give a collaborative. And this partnership we are talking about, in private sector we have seen several types of partnership, like joint ventures or someone sister concern or like this. So what type of now situation pattern is going on? Number one. Why I'm talking about this cooperative? Because just to give a light up, sir, what about this fintech's importance in Agril, rural Agril, especially in infrastructure and food processing? Mainly we are seeing in urban areas only, different technological aspects. So what is the significance or future, or what is the impediments for that, especially in cottage industries also? If you see in rural and especially in semi-urban areas, what is their role and in the future? Third, coming to this, relating to this.
I think we need to keep it sharp, otherwise we have time.
And what is the comprehensive package? Suppose in Agril, if you want to join collaboration with the banks, so see, not only the finance, see the impediments, because a farmer, maybe he has a source of finance, but he is not required the other inputs, other knowledge, other information also. So can any comprehensive package is there in the near future like this? Thank you.
So I'll maybe respond to first part and then request. So all the banks are also doing inclusion through partnerships in the rural segment. So it's not that discussion was primarily saying that this is going to happen only in cities. I have seen all banks focusing on rural because the needs are very high and they have to take care of their PSL requirements as well. And generally the margins are also very good in some of these segments. But I think the cooperative bank side, maybe you want to take, sir, that question, Gopal, sir?
I think, even in urban areas also or metros also, this is not only being pushed by the fintechs or banks. There is a demand from the customers. And there is a demand from the customers because there is a value. So, adoption of technology in any industry, in any case, it is pulled or pushed by all the stakeholders. So, cooperative banks are also not lagging behind. There is definitely a demand, and it is a focus area. And as you ask, how do you rate banks or fintechs, rate banks or banks rate fintechs? Once a product is developed, it is stabilizes. There are opportunities to take those products to smaller banks also. Not only fintechs, even you should look, RRPs also, regional rural banks, which generally, from our visibility, you will not be able to see, like RRBs are playing a very big role in the financial market. So that is also one area that needs to be looked at. But slowly and gradually, I think things are spreading. People are taking care of that. Fintechs are reaching smaller places also.
And to be on a very practical side, I think cooperative banks, most may not have very stable and structured tech platforms to work on it. I think this is a real challenge on the ground. So they may have a tech challenge, they may have also resourcing challenge of that kind which can manage. So I think it's a long way. I think maybe I've seen few startups focusing only on the cooperative segment and building the digital channels and partnerships, the API structure for that. But that journey just started for some of them, and let's see how the revenues are getting built for those startups who are working with them and how business scales. So it's a work in progress. It's a two-way street, right? So I think cooperative sector is slightly difficult at this stage. Okay,
So,
I'll
but
just
suppose if they don't come forward, they will be out of the business. Because ultimately customers need value, they need facilities, they need convenience. So it will be, push from the customer side also.
So just to augment in what you both said, for us, we are in discussions with a couple of cooperative banks, and trying to understand their requirement, etc. on SME side mostly. There are agri-tech fintechs which are there, which probably for agriculture specifically, we can refer to you. But MSME sector, there has been demand from a couple of good cooperative banks where we are working closely. But as he rightly said, there are impediments on way in terms of how your lending book is that side and what kind of cost of funds are there. So we can talk about it, but there is an initiative right now going on.
I think you're looking at me continuously. Thank you. So we stop now. No, I'm just joking. So I think the time is up. I know that's up. So we stop now. Thank you for your guidance, and thank you for the audience for your, I think, patience. I didn't see too much of movement, so thank you guys.
Thank you, gentlemen. I'd like to invite Mr. Mohit Gupta, Senior Director Sales, DNB India, to please present mementos of appreciation to our panelists. Mr. Pankaj Gadgil, put your hands together, ladies and gentlemen, for our panelists once again. Mr. Litesh Majethia. Mr. Gopal Bhagat. Mr. Sandeep Sonpatki. Mr. Ravi Tyagi. And our moderator, Mr. Singh Jaini. Could we get together for a group photograph, please? Thank you, Mr. Gupta. Thank you to our respected panelists. I must say it has been an interesting and an enthralling session indeed.